Let's get chatting about individual stocks. This is our movers and shakers segment, and we've got to start with the savior of today's trade, and that's ITC. That's holding tall with a gain of close to about 4.5% as we speak, climbing above the 250 mark. Mangalam, take us through ITC, what a brokerage is saying, and why is Colgate also jumping the bandwagon?
Well, ITC, because of the announcement that came by yesterday from the finance minister, the big announcement was that the GST rate on tobacco products will be 28% plus cess. What would that cess be? The cess will be the differential between the current tax incidence of ITC minus the 28%. ITC currently pays 57% tax, so the cess will be 28% minus 57% minus that 28%. That means that the ITC, the company will not have to pay any more tax than they are currently paying. And that is something that the street was worried about. That was the biggest fear. The street was thinking that there could be 40% rate on cigarette as well as the other products. So that fear being abated has taken the stock higher in trade today. Does that mean that the company is out of the woods yet? Well, perhaps not, because there are two things which we still need clarity on. The first one is the quantum and nature of that cess. Is that cess going to be ad valorem? Because currently the excise duty is on a per stick absolute basis. So if the cess is on a percentage basis, further price hikes could be impacted. And the second thing, the finance minister also said that this cess will now be reviewed or renewed every year. So that brings the unpredictability factor back in. It could very well be like the excise duty changes that we have every budget. The cess could change at least for the next 5 years as well. So despite these things, the fact that they are not going to pay any more than the 28% or the current amount that they're paying is abated a few fears of the street, and that's why the stock is gaining. Brokerages have written on it as well. Macquarie as well as CLSA are positive on the stock. Citi now exercises some caution. They say that they reserve judgment on ITC due to higher unknowns. Another reason why the stock is gaining is because it's currently trading at 26, 27 times 1 year forward earning versus the FMCG industry, which trades at 40 times. And historically, ITC has traded at 20 to 25% discount. But because of the GST overhang, that discount had widened. And now there is a bit of a catch-up playing out there. As far as Colgate is concerned, well, they are also likely to be purported beneficiaries of the GST. In fact, we have a note coming in from Credit Suisse. They've upgraded the stock to outperform, and they've increased the target price by 50 rupees as well, because they believe that currently Colgate pays around 25 to 26% indirect taxes. With the GST, it will come down to 18%, and Colgate in particularly will benefit from this because the likes of Patanjali and Dabur already pay lower tax. So Colgate will get a better benefit from that lower tax rate. So that's why that stock is buzzing too.